What is the same mistake that's made every single year at this time of the year? Today we're going to go into a little bit of a deep dive, go through the bit of the history in terms of recent purchases in the last 12 months to kind of break down what is the same mistake we see each and every year around this period, and what you can do to actually make sure you're not moving with the masses and get ahead of everybody else. Guys, if you're new to the channel, my name's Julian. I'm the head of strategy here at Ripehouse. Today we're going to have a bit of a deep dive at the same mistake that's made every single year here in that November to December period. And I guess what we see at an advisory level each and every year is every time around this year, people are kind of putting their financial plans on hold. We get to mid to late December, November, and people are just wanting to put things on hold and come back in, start of the year. Well, then the start of the year comes, they're still busy enjoying holidays. January becomes February, February becomes March, etc., etc. When I guess one of the biggest secrets that stays within the property space from a buyer's agent level or sophisticated investor level is the best deals. And what I mean by the best deals in terms of where you are able to strike with the highest conversion rate on negotiation and also buying at the highest point in under market value happens in this late November through to the late December period. And we know this, and the big reason for this is because kind of a few reasons. Firstly, most people are trying to navigate their way through ending up and wrapping up the financial year. People have got all these projects popping up, they're trying to smash through work, and they're basically too busy to even think about anything else but work during that period. So that pushes a large segment of buyers out of the market, whether it's investors, whether it's home buyers. They pump the brakes and put things on hold until next year. Then you've got people that are just distracted. They've got to get all the Christmas shopping, all their kind of family plans, etc. into that period as well. Instead of going to open homes at that November, December period, they're down at your shopping centers, getting all that kind of stuff done, making sure, getting ready for the Christmas ham, all that kind of stuff. Those things are pulling people away from open homes. And then the other one is people going on holidays. A lot of people, it's no surprise that a lot of offices closes over that kind of late December, early January period, that their mind is focused on doing and getting to their holiday. They don't want to think about it until they've had that mental reset next year. Well, for us at the buyer's agents level, this is where we kind of shine every single year. This is our bread and butter time to buy a property. This is where personally, I bought a lot of property over the years. This is where we see investors that we work with that have financial backgrounds, maybe they're brokers, maybe they're accountants, actually do a lot of their purchasing this time of year. It doesn't mean, I should say, that every other time of the year isn't a good time to buy, but if you're looking to get the best under market value and compete with the least amount of people, this is the time to do it. And to give you a bit of a snapshot, I thought it would be good to review last year's numbers, because last year, this is not a small sample size we're dealing with either. This is just late November last year through to late December. It's around about a 6-week period. And we're looking at over 50 properties purchased over this time period. And this is a mixture of capital growth and buying property under market value. So we can see the national averages, and we'll go kind of compare the pair type scenario. We've got the national average over that period of time. It has been about 5.6% capital growth. This is versus every state put together. Don't get sucked in by just doing some research online where Sydney's had a bit of a spike and its weighted average has lifted the whole market up. There are plenty of states, particularly Hobart, that have gone backwards as well. But the national average has been 5.6%. If you compare that to the properties that we purchased in November and December over that kind of 5-6 week period last year, those properties are now 18% higher in value than when we initially purchased them in terms of if they were on market today. So that is a significant jump. We are talking more than 3% outperform, 3 times outperforming the market in terms of capital growth. And then we compare the rent, because this time last year, we kind of had the same fear mentality going on where interest rates were rising. Not only were those 3 main factors being that work, holidays, and Christmas shopping putting people off from buying, we actually had people just copping several interest rate hikes in a row, and they wanted to kind of put the brakes on and wait until interest rates calm down. Well, we're basically, RBA just came out today talking about more potential interest rate rises for next year. This is seeing, again, that dip in consumer confidence starting to happen. So we're going to see that fourth factor come into play again this year, where people are not wanting to pile into the market, particularly from an investment perspective, thinking, oh, I'm going to wait for interest rates to come down, or house prices are going to crash and correct, and I'll just wait to pick up a deal. Well, even at a national level, that didn't work for you last year. You were already paid 5.6% more in terms of average. The areas we went up, they went up 18%. The rental growth, the areas we purchased went up 15%. That is a huge, huge jump in terms of your rental income coming through. So we're talking about, if you have a $500 a week property at this time last year, it is now sitting around $575 per week. It's a $75 jump, going a long way to cover your returns in terms of those interest rate rises. And even if those rental returns aren't covering them right now, that capital growth sure did. So guys, this for me is one of the biggest mistakes I see people make each and every year. They sit on the sidelines, and even that first quarter, so that first quarter after that Christmas period, it also happened to be the highest jump in terms of capital growth leading into that year. So you kind of had a double whammy effect, and it's pretty common each and every year, where you get the biggest jump, or biggest dip, I should say, in under market value purchases. Then you can sometimes get your biggest jump for the quarter in terms of capital growth. So over a 6-month period, a lot of those people that were buying in Q3 last year and then into Q1 the year after, they were making $30,000, $40,000, $50,000, $60,000 in that 6-month period. And a fair few of them have actually purchased property 2 or 3 this year off the back of that. Guys, I hope you found that insightful. If you've got any thoughts on this, please leave a comment in the section below. Make sure you liked and subscribe. If you're not already, please make sure to follow me on LinkedIn, where I post a lot more data and insightful reports coming into the new year. Thanks for watching today, and I'll catch you in the next one. Bye for now.